All right, everybody, welcome to Turbo Trading. Thanks for taking the time this weekend to attend this webinar. Today, we're going to discuss how to trade the turbo signal on your binary dashboard. Before I proceed, I am required by the law to read you this disclaimer, so please bear with me. The contents of this material are for informational purposes only and do not constitute investment advice. Blue Sky Binary assumes no responsibility for any potential errors, inaccuracies, or omission in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Binary options trading may not be suitable for all investors as it carries a very high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in binary options, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and binary options trading and seek advice from an independent financial advisor should you have any doubts. The agenda for today is to give you a quick introduction on turbo trading, also then to delve briefly behind the theory that is the turbo. Then we'll discuss calibration, how you can set up your charts and your software, which is the binary dashboard, to optimize your trading of the turbo. Then we'll discuss valid trade setups. Okay, every time you see a turbo signal fired on the dashboard, you should pull up your charts. And then we'll also discuss how those chart formations should look like in order for you to make money using the turbo. And then right after that, we'll discuss, of course, the setups to avoid, and so that you can basically filter out bad signals. We'll discuss briefly suggested time zones because the turbo strategy comes into its own and is optimized or is best traded during certain times. And then last but not least, we'll of course discuss money management so that you can grow your capital responsibly over time. And I'll take a Q&A at the end. So to give you a quick intro for those of you that are quite new to trading the turbo signal, it's a 5-minute expiry signal, and it fires when our dashboard algorithm has determined if the price in the very short term, so we're talking anywhere from 1 minute to 5 minutes, has moved up or moved down too far and too fast. Essentially, the terms that you may have heard that explain this behavior is being overbought or oversold. Okay. Turbo can be used on currency pairs and commodities as well. Turbo signals do not work during news. They are actually completely obviated by news. All right. So when there's major news and turbo signals fire, they shouldn't. We have adjusted them for that. But in the event there's some unforeseen news, you absolutely do not trade turbo signals. This strategy is based on 5-minute charts, okay, with a 5-minute expiry. So let's go over the theory very briefly. Turbo signals attempt to call a very brief reversal or a bounce from a resistance in a ranging market. Okay, so essentially when the price moves up a lot and it hits a resistance point, and normally it could be a technical resistance or a Bollinger-based resistance, the turbo signal will run some calculations and effectively try and call the reversal. Okay. And this reversal, because it's only 5-minute expiries, might be just a short interim reversal in a larger, broader uptrend or downtrend. Okay. Now, our back tests across 18 currency pairs and 2 metals over 1.5 years, over thousands of turbo signals, show an in-the-money rate of about 66%. Right. So 2 of 3 signals tend to win in our back tests. Now remember, back tests are only indicative. Of course, the most important thing is the live and forward test, the future or the actual trading of any strategy. And month to date, so the turbo signal has been firing on the dashboard for quite a few months. Just for this month, for last month, the turbo was at 64% in the money with 48 wins and 27 losses. Okay. And year to date, so since January, it is at, roughly speaking, the same level of ITM. Also, it's probably important for you to note that the algorithm is seasonally adjusted, and it adapts to market time zones and fluctuations for each currency pair based on historical volatility patterns, which means that the turbo signal may not fire when similar conditions on a pair are met. Okay, so that's the theory behind the turbo. Let's now discuss how you can calibrate your charts and your software so that you get the most out of the turbo signal. First point to note is that turbo signals are fired on all FX majors. So this is Euro US dollar, USD Japanese yen, AUD USD, and cable. And other pairs as well, of course, such as the JPY related pairs, the commodity pairs that are Canadian dollar related, and some other exotics. So what we would suggest is pull up charts for these aforementioned pairs. Remember, although the signal, if blind traded, would give you about 60 to 65% ITM, we do not suggest that you blind trade the signal, right? If you're serious about making money using these signals and making money in binary options, you need access to a good chart provider. When you have all these charts up, please pull up a 5-minute chart time frame. Apply Bollinger Bands, okay? Trading without Bollinger Bands is trading blind, so please apply them and ensure that your period is set to 14 periods with 2 standard deviations. If you want to increase this period for added safety, you can increase it to 20 or up to 25 periods, but keep your standard deviations at about 2 or 1.5. Don't increase it to 3 to 4, you just won't get enough opportunities. Then open your binary dashboard and ensure that it is 2 p.m. GMT onward in the day. You can trade turbos earlier, but they're more risky. And why is that? Because there is significant news flow that comes out in the European session. Around 2 p.m. GMT onwards, liquidity tends to drop, and after 4 p.m. GMT onwards, liquidity almost is completely pulled out of the market, almost by 50-60%, because London itself accounts for 40% of FX liquidity. So you want to trade turbos later on in the day. They are safer trades. Why is that? Mainly because range-bound markets or markets that are mean reverting tend to occur more after London has closed, mainly because it is more volatile, also less liquid. And that's exactly what the turbo takes advantage of. You want volatility. Do not trade more than one turbo signal at a time. All right. Although it is rare that you'll get multiple turbos, in some instances, like we saw last week or the week before last week, we had 3 or 4 turbos firing, and all were on correlated pairs. And what I mean by correlated pairs is Euro US dollar, USD Japanese yen, US dollar Swiss franc. All 3 turbos won, in my recollection, but the danger there is that all 3 could have lost as well, and there's no point that you need to subject your capital to that. So even if 3 or 4 turbos fire, pick the one that is most suited to your trading style. It's very important that you set your expiry for 5 minutes. 3-minute expiry is somewhat more risky, although it does work. Even in our back tests, it is somewhat more risky. All right. And last but not least, once you have all of this set up, it is of course very important that you trade with virtual money for 2 weeks before generating a stable percentage return, and then you go live with real money. Like with any other signal or any advanced indicator in any part of the binary dashboard, or if you're using another signal service, always use virtual money because you're doing this for the long run. You're not doing this to get rich quick within a few weeks. So just hit it with virtual money first. If it's working for you, then you can switch to live money and follow some proper money management prescriptions that we're going to go over later today as well. All right, so this is how you calibrate your charts and your software. Let's go over some valid trade setups. Okay, this is the meat of the webinar, so please do pay attention. Again, this is recorded and this is available on the binary dashboard. The first and most profitable chart setup, when a turbo signal fires, is known as the flat channel, referring to a flat Bollinger channel, where the lower Bollinger band and the upper Bollinger band are flat or flattish. Okay, so a turbo signal, either call or put, fired when the price has hit or breached the upper or the lower Bollinger band, now assuming that the bands are parallel and flat, is a high probability setup. Right? I'm not going to say it's a 100% win rate setup. That doesn't exist in the markets. It's a high probability setup. Now, if you can confirm these Bollinger Band levels with major resistance points as well, if you have the time, you might not always have the time, then the probability of win increases further, right? So if this is far away from a resistance point, there is still a chance that the signal may lose. If it's coinciding with a resistance point, whether it's a technical resistance or a psychological resistance level, then you're probably going to expire in the money. Either way, when the turbo signal is fired and you see a flattish Bollinger channel, so let's say the price is, let's take this signal for example, the price drops pretty quickly and then it bounces off the lower Bollinger. If the signal fires call, you can probably take, and in this case you would have won, right? Remember, these are 5-minute charts. Okay, and the same held true later on when the signal fired for the third time as a put when the price had hit the upper band. So these are 3 wins in the time span of just an hour. So flat channels are the best setups. Let's look at another setup. Then you have the late breakout, right? And I'll describe why late and why not early. The late breakout, so if a turbo signal fires call or put when the price has hit or breached the lower or the upper Bollinger Band for the second or third time, assuming that the bands are diverging or trending down in a particular direction, is a high probability setup. Okay? So that's a lot of jargon right there. I'm going to simplify for you, especially for those of you that don't know Bollinger theory. Basically, what I'm saying is, if you take a look at the Bollinger Bands and the lower band is facing downward and the upper band is also facing downward, generally speaking, the price is probably going to be hugging the lower Bollinger, or it's going to be trending downwards. All right, and vice versa in an upward Bollinger channel. In some instances, the upper band is facing in one direction and the lower band is facing in another direction, and this is a breakout. Same thing, the price is trending when the bands are diverging. What you don't want to do is get in when the signal fires. If you see a call signal firing and you're in a red candle, you've just seen the price breaking out, and it's the first time, you don't want to get into that trade. You want to wait for the second resistance check or the second resistance breach. In this case, the second signal fired here. Right? Mind you, this is a 1-minute chart. I've zoomed in actually, so you wouldn't have taken this trade anyway. Although this was strictly speaking the second resistance breach here, it would have only been kind of 4 minutes after the original signal. So the second signal would have fired somewhere here. Okay, remember on the second resistance breach, and you would have entered a call, and this would have expired deep in the money. And if the signal fires and it's the third resistance breach or the fourth, so if you get a call signal here and you can see that it's hit this resistance level a few times, then this one is probably going to expire in the money. But if it's the first time, and I'm going to reiterate this again, if you are getting a call signal the first time the candle breaks south or north, that means it's probably going to continue in that direction. All right, that's the risk. So never trade a turbo very early in a breakout. Trade it on a second retest or a third retest. Okay, and this is why we call it the late breakout. Just to recap, so there's a flat channel, that's the best turbo formation there is. Then there's the late breakout. Okay, let's discuss some invalid trade setups. Now, as a corollary to what I just mentioned about the late breakout, of course, an invalid trade setup by logic would be the early breakout. Right? So a turbo signal call or put that's fired when the price has hit or breached the upper or lower band for the first time. Mind you, in this case, it's just the first time, right? And again, assuming that the bands are not flat, but they're actually trending down or diverging, this basically is a very low probability setup. If you go call here, the price is probably going to push itself down further and you're going to expire out of the money. All right? So by the same logic that I went over just a few minutes ago, describing a late breakout, you wait for the second retest. In this case, when you get a signal and early in the breakout, you just don't trade it. Because if you do trade it, you are risking going OTM. Now, there is one caveat here. For those of you that are more advanced traders, you can trade these early breakouts as long as there's a significant resistance point, which I've not shown on this chart. But if there is if the prices hit a psychological barrier, let's say Euro 1.100 or British Pound USD at 1.500, these are psychological resistance points or daily resistance points. For those of you that use support and resistance trading, you can certainly correlate those to early breakouts and go call. They are still higher risk signals. If you want to reduce the amount of losses drastically or substantially, we would suggest you only trading breakouts that adhere to the flat channel rule, right? And the late breakout. These are two, I won't say award-winning setups, but they're good setups to trade. So the early breakout you avoid, okay? And then you have a very dangerous formation, and a lot of turbo traders get stuck in this one. It's basically called no man's land. All right, this is the no man's land formation. What does that mean? So a turbo signal fired call or put when the price has hit or breached the upper or lower Bollinger Band and then reversed and headed towards the moving average is a low probability setup. What do I mean by that? So if the price has actually been successfully resisted by the lower Bollinger Band and it's on its way to the upper band, okay, and you get a signal somewhere in the middle of the Bollinger channel, in this case a signal fired put here, most likely it will expire out of the money and the price will continue north till it hits the upper band, here. So what we're effectively saying is if you get a channel and the price is stuck somewhere in the middle of the band, just avoid it. All right. Turbo fires, roughly speaking, about 2 or 3 times a day. So this is a low volume, high ITM signal, right? So already the signals that we're delivering to you are higher quality. But having said that, you will get some of these duds that are fired somewhere around here or here, and you're probably going to expire out of the money. So again, try and play these closer to the Bollingers just to be safe. Okay, so that's actually it. It's quite a simple strategy. I'll quickly recap over these formations. The best one is the flat channel. Then you have the late breakout. Those are the good ones. And then the bad ones is the early breakout and the no man's land. Okay? Now let's discuss time zones. This is your typical foreign exchange map, right? The market opens around, given now the time zones have changed, this map is a little bit old, but the market opens around 11 to 12 a.m. GMT with Australia and New Zealand and Japan leading the charge. The liquidity levels are still low, so if you get turbos fired during this session, that's absolutely fine. Where it gets dangerous to trade turbos is after Europe opens, okay? Because when Europe and Britain are open, you're getting almost 60% volume increase in liquidity. And all that basically means is that trends like this, if you get a signal here, may just continue on, and they just have that much more liquidity driving them, right? So you won't get so many flat channels in a European session unless it's a day with very little news. Generally speaking, these formations happen after the U.S. session, after the European session has played out. Okay, so in theory, although turbo can be traded in all time zones, for optimal results, we suggest after 2 p.m. GMT. In fact, the binary dashboard algorithm that fires the turbo only fires after 2 p.m. GMT. If you ever see any errant turbos firing before that, especially after 8 a.m. GMT, please get in touch with us because that shouldn't be happening. All right. So that's the whole system. Let's discuss money management, then we'll do a quick Q&A. So if a turbo is practiced well with virtual money and you're getting good results, it's a high win rate strategy anyway. You've seen the ITM. And it does not require what we would call brute force tactics, such as martingaling. It's very tempting, and this is what a lot of turbo traders get stuck with. I personally got stuck with this a lot. What tends to happen is that if the first trade goes against you, you may have the urge somewhere here to martingale, right? Because it's turbo, you're like, okay, it's going to reverse. Problem is it doesn't always reverse. The market can stay trending longer than you can stay solvent. So in turbo trading, we would suggest just there's no need to martingale at all. Okay. And with that in mind, also think longer term when you're trading turbos. Turbos can be very profitable, but it totally depends how you trade them. You have to focus on low volume, high ITM. Right? If you're trading 10, 20, 30, 40 trades a day and your ITM is stuck at 50 to 55%, it's stuck there because you're trading that much, right? You're subjecting yourself to more data in the market and therefore more risk. So if you are trading turbos, we would suggest that not a single trade should represent more than 2 to 3% of your total account. All right? That's really important that you understand that. And if you do suffer losses, and mind you, you will lose, there will be losing days. There's no way you can avoid it. Even the best traders at Blue Sky Binary have losses and they have bad weeks. The important thing is to limit those losses and the chemical impacts that those losses have in your brain that force you to overtrade. So what we would say is if you're trading turbos, no more than 2 losses per day or per session, right? If you trade multiple sessions, it's 2 losses per day. And similarly, we would also suggest that if you are, let's say, suffering a percentage drawdown of more than 5% of your total account trading turbos on any given day, just log out, because most probably you're gonna blow your account. So stick to the 5% rule and stick to the 2 absolute stop loss rule per session as well. Now, for those of you that are here that are very new to the binary dashboard, that are new to binary options, we would suggest that you start with a very small account size, $100 to $300, and you aim to grow this sustainably over time. If you suffer a total drawdown of more than 50% of this balance, so if you start with $300 and you're down at 150 trading turbos, it's probably time to stop trading turbos and address how you want to approach binary options trading or try another strategy. All right. But with real money, that's how much you really need to make a good return on your account if you get the turbo strategy right. All right. So that's it. That was the webinar, short and sweet. I hope it added some value to your turbo trading. And for those of you that are getting into the turbo trading, definitely watch this webinar. This is available on the binary dashboard, so you just have to click on it under tips and tricks. I'll take questions now, so please go ahead, either raise your hand or just ask a question. With respect to questions on automation, it is ready. The automation of this signal via signal push is ready. Basically, this will be live in a few weeks from now, probably less. Peter, in answer to your question, will these turbo signals show up in the dashboard? Yes, these signals show up in the binary dashboard. So the binary dashboard is something you should have access to if you're on this webinar, and it shows up around 3 times a day, roughly speaking. Stavros, your question regarding no man's land, do we have a valid setup in a trending market? If I understand that correctly, a trending market is effectively follows a breakout. And in that instance, we would suggest you going for the late breakout strategy. So in a trending market, you don't want to trade the first breakout. The second one is more safer. The third is even more safer. With respect to the no man's land strategy, that's not really a trending market. That's actually a range-bound market. The only problem here is that you've taken the signal too early. One should be taking a signal at the upper Bollinger in this case. Marty, your question on BO, when you purchase a BO contract, first of all, there's no purchasing any contracts. You purchasing, $1 billion worth of binary option trades is not going to impact the market because it's a second derivative. So you're only betting against the direction. The price you're getting normally depends again on the broker, is the average between the bid and ask price, not bid and call. It's like comparing apples and oranges. So I think what you meant to say is the average between bid and ask price. And yeah, most brokers will give you an average price between the bid and ask price. Yossi, yeah, it's correct. I mean, it totally depends on the nature of how overbought or oversold that particular asset at that particular time is. But generally speaking, what I haven't shown here on the charts is if you have your RSI up or your stochastic indicator and you increase the sensitivity to, let's say, 3 or 5 periods, it pretty much correlates with when a turbo will fire. Okay, the turbo is a bit more intelligent than just RSI and stochastic, but in answer to your question, does the signal fire on the bottom of the candle closer to the lower band? It does. It mostly does. Sometimes there will be a delay so that when you see the signal, the candle is already, as you can see my mouse here, it's actually should have fired somewhere here, but by the time you get it, the candle has retraced up, what you call recoil, and that's fine. Believe it or not, with turbo, if you are in a flat channel, you're probably going to win the trade by a wide margin anyway. I personally would like to get at the bottom of the candle, but even if you got in here at the top, slightly higher up, you would have won the trade. Marty, that's correct. It's bid and ask price. You're right. Again, it depends on the broker. It depends on the binary broker, but the most of the brokers provide that. Stavros, that's a good question. So you see, you're 100% right. If you're asking if you had a trending market, would you have a valid setup if the price actually reached the moving average? Let's say in this case here, where you have a downward trending market and the price has reached the moving average, would it become a channel surfer, right? With in this case, a southern channel surfer where you can actually bet put. And you're 100% right. So, but that's not the way the turbo signal on the dashboard works. So with this webinar, we're actually addressing the turbo signal, which is value chart based. Value chart is a very known MT4 plugin, which we have re-engineered to make it somewhat more smarter, higher ITM. That doesn't look at these M&A breaches. Having said that, there is a separate turbo strategy where you can, of course, trade these 5-minute channel surfers. In fact, here you can see 2 wins already and then 1 loss here. So you're 100% right. You can combine this value chart-based turbo signal with channel surfer as well. Marty, good question. So with respect to indicators, I haven't included them in this because a lot of what we do simplifies. You don't really need indicators to make money in binary options. But of course, if you want to expand your analysis and improve your ITM, the 2 indicators we would recommend adding to this are firstly the RSI. Because it's a 5-minute signal, everything is in kind of in micro time terms. We would ask you to increase the sensitivity of the RSI significantly. Normally, RSI comes with 14 periods or 9 periods. Reduce it to 3 or 4, so the RSI looks very choppy or very sharp, and that's a good indicator. When the signal fires, and you also see that the RSI is below 20, or if it's a call, and or above 80 if it's a put, that's a good sense check indicator to have. If you don't have RSI, then the fast stochastic also does a good job as a close substitute. So the stochastic and the RSI are 2 good indicators to use. You can't use MACD on this. It doesn't work with that level. MACD is quite a lagging indicator. So in general, the RSI and the stochastic tend to work well, but it's absolutely not required. So what we have taught you in this webinar today, all you need is the dashboard firing the turbo, and you just need to stick to these 2 winning setups and 2 losing setups, and you know which ones to filter out. All right, any other questions? Marty, with respect to your question on Bollinger Band percentage, what you're referring to there is basically Bollinger Band width. That's a good indicator in general to have. Why would you want to have that? Effectively, when the Bollinger Band width reduces, so the distance between the bands comes closer and closer, that normally predicts or presages a breakout, either a breakout south or north. In this case, you can see, notice how the upper band started to constrict and come closer, and the lower band also started to constrict and come in closer, and lo and behold, you had a breakout. So your Bollinger Bandwidth indicator would have actually, to some degree, predicted that, okay, a breakout is going to happen. If it adds value to you, you can certainly add the Bollinger Bandwidth. Just bear in mind that the turbo signal and its efficacy or your ability to take it and make money with it relies on speed, right? It's a 5-minute entry. You don't want to waste too much time. Again, what we have shown you here, these analyses can be performed in 20 seconds if you have the charts up. So don't go too heavy on the indicators. Any other questions? Correct. So for the purposes of showing you some invalid trade setups, I have zoomed into 1-minute charts just to show you the point of what we're trying to say here. But it is a strategy that we would suggest that you, like for example, you see here, it's a 5-minute chart, right? It's tailored. These signals are tailored to 5-minute expires and 5-minute charts. Just for illustrative purposes, on some of my charts, I've shown 1-minute time frames. Any other questions, anybody? All right, last call for questions. All right, good. I wish you all a good Sunday ahead and a good trading week ahead. Good luck.